So if you want to slaughter savers and investors, you got to get them into the digital slaughterhouse. And the way you do it is with a digital currency. So no more cash. Now we're all digital. This is happening, and it's happening to money, and it will. This is the secret hidden agenda of the digital currency. It's all true. I can give you concrete examples. It converges, as you described, with the elimination of cash. Get ready. And we can only hope that we can maybe get some new politicians or find ways to resist. The Fed won't actually disintermediate the banks, because the Fed was created in 1913 for the sole purpose of propping up the banks. They'll give you some treasury bills, but the banks are bidding at auction for treasury bills that yields to maturity lower than what the Fed will give you for a phone call. Why would you do that? The answer is the Fed bills cannot be rehypothecated. They cannot be used as collateral, but the auction bills can. So what that tells you is there's a collateral shortage. That means deleveraging balance sheets. It means financial distress. And we also see it not just in the treasury yield curve, which is inverted from right now 6 months to 10 years, but also the euro-dollar futures curve, which is even more troubling. It's not unprecedented, but it is rare, and it's not a good sign. But the Fed continues, raising rates in the teeth of this really bad data. So I look for a severe recession in the U.S., really global, because your question was how's the global outlook? It's pretty bad. Maybe something closer to social unrest and riots in Europe. And then on top of that, possibly a global financial liquidity crisis worse than 2008. Wages were up 5% on an annualized basis. It's like, yeah, that's nominal, and inflation's 8%. So you're down 3%. People are losing money.
Yeah.
But so the Fed will pivot eventually, but it'll be too late. It'll be after the damage is done, after we're in a deep recession, unemployment rising. Because remember, they've baked higher unemployment into the pie. When unemployment starts to go up, and I believe it will soon, they're going to say, yeah, we told you, we told you there's going to be some pain. And they only look at the unemployment rate. They're not looking at labor force participation, which we talked about. So if unemployment goes from 3.5 to 4, 4.25, 4.5, that is not going to be enough to dissuade the Fed. That's not going to get them to stop raising rates, because they're only worried about inflation. Now, there's some level where they'll care, but is that 6? I mean, it might be 6%. But when we get to 6% unemployment, we're on our way to 8, and demand is inelastic. So you just pay up, or, kind of do without. But the demand side is much more psychological. That's called demand pull inflation. That's when consumers behave the way I described. And as I say, I lived through the 70s, where, hey, I better buy it today. I better buy it now. You're pulling all this demand forward and bidding up prices because you're worried that it's going to get even worse. So as that applies to today, we are starting with the cost push inflation, mainly the price of energy, but the price of food is a big factor. And of course, they're related. It's like, we're not quite at the stage where it's demand pull. We're not quite at the stage where individual consumers are behaving the way I described in the 1970s, saying, hey, better spend the money fast because it's losing value. So central bank digital currency is not a cryptocurrency. It's issued by a central bank. It's not going to be on the blockchain. Could be, but it's not. It's going to be. It has to be a ledger. But basically, a digital dollar, central bank digital currency, a digital dollar is still a dollar. A digital euro is still a euro. A digital yuan is still a yuan. So it's not really a new currency. It is a new payment channel. It is a new way of distributing the currency. And by the way, the rollout of the central bank digital currency, and this just to kind of answer your question on the executive order, China's gone full speed ahead. China already has one. It's in the pilot program stage. If you were at the Winter Olympics in last January or February, rather, you had to buy your tickets and your meals with your QR code on your iPhone, which was this digital yuan. And Europe is not quite there yet, but they're moving very fast, very fast. The US was taking their time. The Fed was conservative. They had a joint research project with MIT. Take our time. That changed with that executive order. This has now been put full speed ahead. This has been accelerated because the Fed sees the horses leaving the barn, so to speak, and they want to get their digital dollar out very quickly. Now, this goes hand in hand with the elimination of cash. But it will have profound impact on fees and MasterCard. So it's better, faster, cheaper, and less complicated in theory. So that's the case for the digital currency. Okay, let's talk about the reality. What can we do? Negative interest rates. Okay, right now the solution for negative interest rates, I just go down to the bank, take all my money out, and put it in a suitcase and bury it in the backyard or whatever. By the way, it's not so easy to get your money out. That's a whole separate thing we don't have time for, but you can. So you have to eliminate cash if you want to impose negative interest rates. Why stop there? Why not withholding taxes? So if you have a regular job, like most Americans, you get a paycheck, twice a month or whatever. Your employer withholds taxes from your paycheck and gives it to the United States Treasury. And then at the end of the year, you get a W-2, you file a tax return, you reconcile it, and you owe or you get a refund. But that's not true for doctors, lawyers, dentists, professionals, consultants. It's not true for a lot of people. They get paid gross, and it's up to them to file their own, to pay their own installments. And most people do, but they kind of at their will. Well, what if the Treasury said, we're just going to take it out of your bank account? And same thing. We're just going to take it out of your bank account, send you a new form of, CBDC, central bank digital currency 1099, with the amount we took out of your account. Oh, okay. So now you got withholding taxes out of your bank account. This is the culmination of the total surveillance state. So right now we're all under surveillance through our phones, right? And so you go, big deal about the point of purchase. They already know it because you got your iPhone on. Yeah, but they don't know what I'm buying. MasterCard might, but the US government doesn't. But now if my currency transaction has to go through the Fed, they know I just bought a book like I Love Ron DeSantis, why Donald Trump is great, or campaign contribution. I give some money to Elise Stefanik. Oh, she's on the semi-fascist list,
Right.
So all of a sudden you're well, according to Biden, you're a semi-fascist with his Leni Riefenstahl backdrop and his
right
speech the other day. We can stop there. But so I'm on the wrong side of that trade, and all of a sudden they're freezing your account. Gun purchase, sorry, it doesn't work for that. Ammo doesn't work. And it used to be, and what about your constitutional rights? Well, so somebody said to me the other day, well, if they really want to know what you're buying, they can find that out. But they're saying, oh, we're not doing that. We're just freezing your bank account over here. So total surveillance, withholding taxes, negative interest rates, freeze the account, seize the account. I'll keep going, okay? Digital currency is programmable. Please. I'm not a doom and gloomer, but I am a realist. It's programmable. So Trump had $1,400 and $600 COVID relief checks, and Biden had a $1,400. We all got a $1,400 check, right? We're just staying home. The government was handing out checks, beginning with Trump in, I believe it was June 2020. Everybody got that one was a $1,400 check. And then in December 2020, at the end of the Trump administration, everybody got a $600 check. And Biden comes in February 2021, not to be outdone, he hands out, I think, a $1,600 check. So everybody got a check, like 2 or 3 of them. And a lot of younger people opened accounts on Robinhood and started trading Bitcoin. That didn't work out too well. But a lot of people saved the money. But there were very definite spikes in retail sales coming within 30 days of the checks. Well, that's not surprising. I give people free money, they'll go buy stuff. And that kind of kept the economy going. It wasn't a real boom, but it looked good. But we're not doing that anymore. There's no more checks. And so you got a lot of people who lost the habit, a lot of people staying home, watching, maybe the World Series or whatever, eating Doritos, but they're not working. A lot of people out of the habit, but they just got used to government handouts. Not everybody, but some. And the other problem is, but now they'll send it out in a digital form, and they'll say it's only good for 30 days. Because we're a little, use it or lose it. We're a little bit worried about aggregate demand here, so we're giving you the money, but you got to spend it in 30 days or it disappears. Or just do it to your bank account. It doesn't even have to be a new check. We're gonna whack your bank account 1% a month, not as a negative interest rate, but if you spend it, we won't. So the applications of this are horrendous. It's all straight out of George Orwell. And if you take away cash, then you don't have a workaround. At that point, the only workaround is gold, silver, and real estate's a good store of wealth. I think it'll do well, but you can't spend it. So.
What's your view on that?
Well, I agree with that. First of all, the history of money is interesting, as you know, but people are really good at inventing new forms of money if the old forms don't work. And it's not just the collapse of confidence or, the gold standard or whatever. It's just like in the Great Depression, there wasn't enough money. So towns minted wooden nickels. When I was a kid in the 50s, they said, don't take any wooden nickels. Like, oh, I haven't seen any. But in the Depression, it was legal tender, not legal tender, but people accepted it. And so people will find a way to create new forms of money. So if they outlaw cash and everything's digital and they're doing all the nasty things I described and worse, and by the way, Steph, again, I'll be really brief, just to give concrete examples. In China, everyone has a health code. It's digital QR code. You're red, yellow, green. Red means you have COVID. Green means you're okay. Yellow means you have a test, but you're awaiting results. But everything you can do is affected by that. If you're red, you cannot get on a train. You cannot buy a plane ticket, et cetera. So, okay, then separately, a mortgage in China, the way it works is you take out your mortgage, you sign the mortgage note and the money, and you put your down payment down, but there's no house. They then use the money to build the house and deliver it to you. But people get mortgages on houses before they're built. In effect, you're financing the developer. Well, what happened was the developers stole all the money and they got all these unfinished houses. But the banks are saying, hey, you still got to pay the mortgage. Sorry, you signed up. So now there are mortgage strikes in China, and they're spreading. So about a month ago, a bunch of Chinese from one province were going to take a train to another city to join a mortgage strike protest. Guess what happened? The health authorities switched their codes from green to red. They switched the COVID codes, nothing to do with the mortgages, but once it was red, you couldn't join the protest, okay? 5 days ago, the state utilities in the state of Colorado took control of people's thermostats externally. Electric vehicles, and 5 days later, they said, by the way, don't charge them because so my point is, this is all happening.